Good afternoon. This is Tom Alexander. It is Wednesday, September 15th. It is 4:34 p.m. Eastern time in the U.S., about 20 minutes after the cash close. And I want to follow up from this weekend's report as to what has happened since Friday's close. Now, coming into Monday, I thought we were on the cusp of a very sharp move. I thought we were close to a low time-wise. I thought price-wise, we might well have a sharp shakeout, washout type of low that formed early Monday, and then we'd be off to the races. Well, that didn't happen. But something else that's probably more rare has happened, and I think that led to today's rally off of these lows. And coming into the day, NYSE breadth closed negative 6 out of the previous 7 trading days. That's extraordinary. That's very rare. I don't know when that has occurred prior to this particular instance. It probably has. I don't recall when it was. So we came into a market that was beginning to get more and more compressed to the downside on one hand. On the other hand, remarkably, in that entire stretch of 6 negative trading days, we never had even an intraday reading below negative 1450, and we only saw that low once, and that was at the extreme low on Friday. So that's why I was sort of leaning towards some sort of washout low where in a situation where we would see negative 2000 breadth. Well, it didn't occur, or I probably should say it hasn't occurred. And today is evidence on the bullish side of the ledger. So let's look at a few things here. First of all, you can see on my screen, the NASDAQ spiked to a lower low and then promptly bungee jumped higher. This is almost a false breakout type of trade, and it generally implies higher prices. Now, the remarkable thing about the pattern since the March 2020 low is if it is going to continue, if it's not different this time, we have just come off of a low that contained the least amount of downside contraction or damage internally than in any other pivot low since the March 2020 low. So the market remains manically bid, and as I put in the report, this has the smell of institutional FOMO, fear of missing out. Anytime the market dips, and this was less than a 2.5% drop from high to low, the market is bid back up. This decline was also characterized by a very two-sided, contested decline. There was not a lot of downside conviction that held. Any downside trade was almost immediately retraced. It was choppy and spiky the entire way down. And this is a 240-minute chart that shows that pattern very nicely. You guys that have been with me a while recognize this. This actually is an auction market pattern. It's similar to a balance area, except it's directional. Now, it's balanced in that it's contested. It's contested. It does have a directional bias to it. It did make lower highs and lower lows, but you can see the retracements against each dip were extraordinarily violent and deep, including into today. This always results in a very sharp move. Always. We see this in all time frames. We see it in all markets. It's not unique to the Stkmkt futures or just the ES. So that's another reason to be looking for a sharp movement here, and it appears it will be up. Now, as of the close, we have traded up into an upper key reference area. And in strong trends, I'm going to go back to a daily chart. In strong trends, in this particular instance, the trend is down. So the previous day's high and the second day back's high are critical. In an uptrend, it's the previous day's low and the day before that's low that are critical. This is a really good guideline you can use in any market. Doesn't have to be Stkmkt futures. So we've already retraced almost the entire range from yesterday, and we retraced up to yesterday's session high, which is just below the previous day's session high. So this is the immediate upside key reference area. Now, what should happen if this is the rip off of the latest dip is that the market should continue higher immediately. If you go back and you look at these previous dips and rips, you had, this was a day, I think you had 2 more days up. You had a day up here, day up here, day up here, 4 days up. You had a day up here, pause, high, 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 higher high. Here you had 2 days, and then you had a test, but at least 2 days. So you can go back and you can do this yourselves and see each one of the rips had immediate follow through. So that gives us something that we should be looking for if indeed this is another dip low prior to a rip higher to new all-time highs. Let me think. Let's take a look at profile view. And this is something I wanted to show. Forget this, the black, okay, this is today's day trade. When we came into the market this morning, we had spent Globex in this area that coincided with the high volume node from yesterday afternoon. So we came into this morning and we pointed this out in the live trade room in real time, the importance of a break above here. And we were looking for a sharp move, either lower or higher. And I had been favoring long trades because of the situation in Brett. And so we did indeed get this rip higher. So we'll see what happens. What should happen is follow through tomorrow. Now, the important downside level to keep an eye on is this 44.80, 44.480, 44.43 low, this area right here. Actually, you probably shouldn't retrace more than half of this range. If you get below much of half of this range, it's a little bit of a heads up. If we trade down in here, it opens up all sorts of different scenarios. So really, this is almost a binary situation where if it's not different this time, this market should be strong again tomorrow. I'll keep you guys updated. Do me a favor, if you like the video, hit like. If you have not subscribed to my channel, please subscribe, and I will keep you guys updated. Have a great evening.